Hey guys, what is going on? Welcome back to my Robinhood portfolio. Just wanted to jump back in the portfolio very quickly here to mention something I left out on my last video. If you guys haven't seen the last video, go check that video out and then come back here really talking about some of the key things to avoid when penny stock trading, especially for new investors who don't have a lot of experience penny stock trading. One of the things I left out was price movement. So as you guys can see here on the portfolio, on the bottom there's a little ticker symbol that typically has some news, including price movements. If we click on that, it's basically alerting you to stocks that are moving quite dramatically. Not quite sure what the threshold is, but typically anything over a couple percent or so will be flagged in that particular box there. And this is a very bad way of trading penny stocks. I meant to mention this in my last video as we were talking about a lot of investors will sort of jump on board with momentum trading with a lot of these particular stocks. If a stock is trending up, 10%, 15%, 20%, the examples I gave on the last video, DCTH and DRYS, a couple of very popular penny stocks, they've had movements of 100+% in one day. And a lot of investors will see this in the alerts box here, click on that and think this is a great stock to jump on board with. But as I explained in my last video, this is probably the worst way of trading. You simply don't want to jump on momentum trading. If you know what you're doing, that's one thing. But if you have no discipline, if you're not employing best practices, if you're really not managing risk, you are going to have losses incurred. That's just nature of the markets. You need to have a very disciplined approach. So the way to penny stock trade is not going off these particular price movement flags, stock announcements, stock alerts. You really want to have a very disciplined approach when doing penny stock trading. So if I scroll back down to the bottom of the graph here, let's jump into DCTH, for example. You can see over the last day it's come down a bit, but it has now stabilized. Over the last week you can really see that big jump up here, 300%. At one point, like I mentioned in my last video, getting up to 500, 600% or so. But the way of doing penny stock trading is not going off those alerts. The way of doing penny stock trading is taking a look at the charts and then kind of seeing where the peaks are, where the valleys are, and really getting a very disciplined approach with regards to setting price targets before you even see the stock moving. So you want to have your limit buy and limit sell orders already kind of pre-planned out. It's very difficult for stocks that are moving very rapidly like this. That's why one of the major stocks that I do a lot of trading in is Ford. It's kind of like a penny stock in which it's only valued at $11.14 currently. But if we take a look over the last week here and over the last month, you can see there's really predictable patterns within this particular stock. You can see it's peaking down here 11.12, 11.07, here bottoming out at 11.04, and the peaks 11.24, 11.24, 11.28, one point getting up to 11.41. So then you can really start putting in thresholds for limit buys and limit sell orders. Maybe a limit buy at 11.05 or so, trying to time that peak. You can't time it perfectly every time. And then also on the limit sell, maybe doing 11.20 for the limit sell. And that's really what I've been doing. I just did a quick trade today as well, just to kind of show you guys. I got out of one trade, and then I also did another day trade. So 210 shares, 11.16. Let's go to more here. I did a limit. Let's see if I can find my limit buys. Here's my limit buy, June 20th. So this is a couple days in the making. This would be considered a swing trade, 11.15, 210. And you saw on the top here, I sold those shares off 11.16, 210. So I'm not making a lot of money, but I really wanted to free up some of this capital for Portola. And then if we go back a little bit further, there's another limit buy at some point as well, which accounts for this limit sell here, 250 shares at 11.15. So it just made a couple quick limit sells. And the way I'm doing this is not going off price alerts or price stock alerts or price movements. I'm really going off of what the stock has historically done in the past, planned out my limit buy, limit sell orders, and then in a very disciplined approach, employing best practices, in which you're trying to manage risk and avoiding losses, you put in your limit buy and limit sell orders. You are not going to the top of the portfolio, looking at price movements, clicking on those particular stocks that are in your watch list, or maybe you have a couple shares of the stock, seeing the price move and then trying to play the market based off of those price movements. By that time, it's too late. As I explained in the last video, By the time you see these price alerts, the opportunity to jump into a stock or jump out of a stock has already passed. You also get alerts for stocks that are trending down as well. But by the time you receive these alerts, the opportunity has been lost. So you really have to do your due diligence, research some of these stocks that you're wanting to get into, put your limit buy, limit sell orders in before the price movements happen. And then after the price movements happen, you don't even really need to take into consideration the alerts because you've already put your limit sell orders in after you purchase a stock. You never go off the stock alerts. It's probably one of the worst ways and one of the biggest rookie mistakes any new investor can make on the markets, especially on Robinhood and especially with penny stock investing. By the time you see those big price movements, the opportunity has already been lost. So again, just wanted to update my prior video talking about penny stocks. I forgot to include that. There was quite a few comments for whatever reason talking about price alerts and using price alerts, but that's really not the way you want to be managing your portfolio. You want to be doing your due diligence, doing the research ahead of time, knowing the exact price you want to put in for your limit buys as well as your limit sells, and then just going and doing a very disciplined approach about putting those orders in. And not trying to get caught up into momentum trading. Like I said from last video, momentum trading is probably one of the worst things you can do. Buying a stock simply because you see the price movement or because there's a lot of folks in a particular chat room saying buy a particular stock. That's not what you want to be doing. You want to do your due diligence first, do your research. Then, like I said, employ best practices, stay disciplined with your limit buy and limit sell orders, and really just try to manage risk to avoid loss. So yeah, just wanted to quickly update my last video. Again, take a look at that video, come back to this video. You'll have a much better perspective on what I'm talking about with this particular video. And yeah, kind of with that, I'll end the video. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. And until next video, we'll see you then.